Hello guys, how's it going? And it's also Bedako here with Learn to Trade with Ease. And so if you are new here, you're welcome. And if you are not in our Telegram community, it's Traders Hub Community on Telegram. So Traders_Hub Community. Alright, so without wasting my time, let's jump into the chat and see what we have for today.
And we want to make some money out of the financial market. So first things first, we come on our chatting platform, which is TradingView, and over our watch list, you can select any asset you want to trade. So over here, we are on Euro USD, the 15 minutes time frame, and then we want to come on our chart at 6 a.m. GMT. That is when we start our day. Is that okay? So the start of our day is at 6 a.m. GMT. And then what do we look for when we come? We are looking for what happened. What did the market do during the Asian session? That is 8 hours of information, 8 hours of data that is relevant to us in our trading day. So we are pretty much trading what? The London session or the Frankfurt Open. Okay. So when we come, we want to mark out the high and the low of the Asian range. And how do we mark out our high and our low? First, we use this indicator called sessions. It's called Sessions by Lux Algo. Okay, so when you have it on your chart, it plots out the various sessions: the New York session, the Asian session, the London session. So when we have this, we then mark out the high and the low of the Asian session. And why do we mark out this? Because this is going to show us our bias for the day, our daily bias. If we are buying today or we will be selling today, it's all based on the Asian high and low being broken or being taken out. Is that okay? So we mark out the high and we name it as the Asian high liquidity. And that what? It took 8 hours to form the Asian high liquidity. And again, we mark out the Asian low, which also what? Literally took 8 hours to form this low. Okay. So we have enough data relevant to our trading strategy or our trading edge. And then what do we want to see? We want to see a break of this high. And by a break, we want to see a body close above this high. And we currently have that. We have this big bullish Marubozu candle taking out the Asian high. It is sweeping it, it is grabbing it, whatever it is doing. It has broken the Asian high. So as soon as that is that, we get to know our buyers that today we are only looking for sell opportunities. Every buy trade will be neglected because our high has been taken out. So what do we look for to enter? We look for a fair value gap. So with this, you use the indicator called FVG by Nephew Sam. And what this indicator does is it shows you every fair value gap on our chart. But because our bias is a sell, we'll be looking for a red fair value gap, not a green fair value gap. Are you getting it? Because today our bias is we are only selling because the high got taken out. If the low had been taken out, then we'll be buying. But since the low was not taken out and the high was taken out, then we'll be looking for only sell trades. So at the end of the day, we keep waiting on our chart till a red fair value gap is formed. And that will be the confirmation for our sell entry. So every trade we are going to take our trade with a limit order. Okay, so since we are waiting for sell, when we see a red fair value gap, that means hey, it's time for us to sell. And it's been what? From 6 till 11, and we are still waiting for our setup. So trading is a waiting game. At the end of the day, you have to wait until your conditions are met. So what do we have here? We have a sell fair value gap. That is indicating that, guys, it's time for you to sell this market. So we take our sell to, and then we say, perhaps, Mr. Market, if you are able to pull back and come back to this fair value gap, we want to be activated and want to go for a 1:3 risk to reward. Is that okay? So reward. So literally, to me, that is a 13.5 pip stop loss and a 40.5 pip take profit. And trading Euro USD over time, I realize that this is a sweet spot. Or you can use a 10 pip stop loss, a 30 pip take profit for a 1:3, or 15 pip stop loss, 45 pip take profit for your 1:3. Find your sweet spot, find your risk appetite, and stick to it. Is that okay? So we now have our first trade for the day. We came on our chart at 6 a.m. GMT, but we get our first trade set up at 11:15 GMT. So trading is literally a waiting game. And what are you waiting for? You are waiting for your setup. When your setup is not ready, you don't force a trade. Is that okay? You literally wait. And so if we have a second fair value gap, we are going to take another trade. So we max out at 3 trades. Okay, we want to take a maximum of 3 trades in a day, not more than that, because we don't want to overexpose our prop firm account or our prop trading account. Is that okay? The market came close, but it didn't activate our trade, and it happens. But you have to sit on the sideline. You don't have to manually enter the trade. If it's a limit order, allow the market to activate by itself. Are we good? So yes, we want to see what the market will do. The market has come back the second time, but it's a little below. We just got activated on this trade, and so we are good. We're putting a little drawdown, and the market is going that direction now. So that is what we love to see. Okay, but all we are doing is we have an edge in the market, and we are waiting for. We have another sell opportunity, a second fair value gap showing up. And when you compare this fair value gap to the first one, realize that this is huge. So when the fair value gap is huge, you want to use 50% of the fair value gap for your trade entry. Okay, so we take our gun too, and then we mark out our 50%. Okay, and this 50% is where we are going to put our sell limit entry. And all we are saying is that this market, if it's able to pull back to this level, it should activate us. And then we go for a 1:3 risk to reward. Okay. Good. So we have one trade active, and we just put in a second limit order, which has not been activated yet. So we have to wait and see whether the market activated or not. All you have to do is sit on your hands, wait for your setup, and allow. So what do we see here? The market is in a huge drawdown as on our second trade. Okay, and we just got taken out. So we literally just lost 1% if you are risking 1% on a trade. If you are risking 0.5, you just lost 0.5. Is that okay? So I'm going to say we just lost 1%. And our first trade is still in. It's still active. But we just lost on our second trade. So we still have another trade to take. So when we get a fair value gap, a sell fair value gap, we will go for a trade. Is that okay? Our first trade is still active. We just got a fair value gap, a bearish fair value gap. So we use 50% of that for our entry. Again, we come here and we are ready to go. And guys, you don't know which fair value gap is going to activate. In the live market, you don't know. So you don't want to be selective. You don't want to say, I'm going to take this fair value gap. I'm not going to take that one. I'm going to take this. No. As long as there's a fair value gap that aligns with your bias for the day, please go for it. Don't second guess yourself. Take the trade. Are we good? So you go for a 1:3 on this trade as well. Okay. And if we get another fair value gap, we are also going to take it because we don't know which of the fair value gaps will be activated. And let's also keep in mind that we have what? Room for 3 trades in a day. Is that good? So the market plays out and you'll be waiting. Maybe you might be YouTubing, might be playing some game, might be doing something just to keep yourself a little busy. Now we have an opportunity to sell again. So we pick our gun to on this fair value gap. and then we pick the 50% of this fair value gap. Okay. And now we are saying is, Mr. Market, if perhaps you're able to pull back, the market can literally keep going without you. But if it's able to pull back, it should activate you. It should put you in a trade. Is that okay? It should put you in a trade. And you don't want to see a fair value gap set up and ignore it. No, you want to take it. Are you getting it? Because you don't know which one is going to activate. So you take your trade and then we are in. So today we've had 2 trades active and 2 trades are literally in a limit order, waiting for the market to pull back to activate us or to put us in a trade. Okay, so the market is currently pulling back, but we've not been activated yet. We just got activated. Okay, so now what do we have? We have 3 trades today. We had our first trade, our second trade hitting a stop loss, and then our third trade just got triggered. So we can take out this limit order so that we are not exposing ourselves too much in a day. Okay, so we now wait. So if you are someone who's going to risk 1% per day, you know that when you are taking 3 trades, that is 3% risk per day. Are you getting it? I want you to keep your risk to reward and your risk exposure in mind. Okay, you can literally see that you're having more fair value gaps, but you are not taking it because we have already been activated on 3 trades. If not, we would have considered all the other entries. And the fact that small sell fair value gaps are showing up or red fair value gaps are showing up is indicative of the fact that the market has picked up momentum to the downside or to the sell side. And so that is encouraging to see. So our trades have what? Greater probability of hitting our take profit as to hitting our stop loss. But unfortunately, our second trade hits stop loss. So we are only active in 2 trades. And if we win, we are up 3%. If we win all 2 trades, then we are up 6%. Then we take out our -1, and then we are still up 5%. Are you getting it? So at the end of the day, trading is all about having an edge or having a system, and then proper risk managing, knowing how to manage your money, knowing how to manage your exposure, your risk exposure, and staying in the market day in, day out, day in, day out. Are we good? So literally the market is playing out and we are waiting. We are waiting. Don't chase the trade. When you have a system, you are calculated. You are not just trading randomly. Even though the winning and losing is a random act, but you have an edge that gives you a higher win or loss in a trading day. So our edge is we wait for the Asian high or low to be taken out, and that is what 8 hours of market information. And then if the high is taken out, we are selling the whole of the day. If the low is taken out, we are buying the whole of the day. Are we good? So yes, it looks like our first trade is getting closer to take profit, even though it's not yet there. So we just wait and laugh to see it. Are we good? So yes, you can keep your trading very simple with this 3-step process: the liquidity grab, fair value gap, and then your risk management. And then you are good to go. You repeat the same thing, rinse and repeat every new day. Every new day, rinse and repeat, rinse and repeat, rinse and repeat. Okay. Oh, it almost hit TP. Almost hit TP on our first trade, but still not yet there. But we are still confident that the market is able to hit our TP. And then you are not trying to manually close out your trade. Is that okay? If it's not yet time, for the best time to close your trade is when New York closes. Okay, so when New York closes, then it's a good time to close your trade. New York, end of New York session, you want to close your trade. You want to secure your money for the day. So we have that. We have the New York coming to a close, and then we can call it a day on this trade.
Hello guys, how's it going? EXNESS here. And this is the year you learn how to trade the financial market. A lot of people have been asking to sit with me, come in person, and this is the year I make it happen. So you have the opportunity to come and sit with me, come and learn how to trade the financial market, learn to trade the cryptocurrency market, learn to trade the forex market, learn to trade the stocks market. Are you getting it? And you have the opportunity to do so with me. So catch you inside. Peace out.